Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we are up 0.1% for the week, so not a whole heck of a lot, but is up nonetheless. For next week, I see kind of similar action. So last week I thought it would go up. That happened on Monday, Tuesday, Wednesday, and then it fell out of bed. I kind of expect something similar for next week to see how we just kind of have this hump pattern right here. I kind of expect another one of these, although probably not exceeding this point right here, which was at, what was that? 68.69, 68.70, we'll call it. So I don't expect it to get higher than that next week. If it did, if it does, I will be surprised. If we go here to the 30-minute, we can take a look at how these bars kind of form out. So take a look at this bar. This is a very bullish looking bar right here. And this one's kind of bullish, but not as bullish as that one. And if we go to the 30-minute action, we can see why. So we can see that it gapped down here on Friday before last and then moved back up, creating an open here and a close here, forming a bar that looks kind of like that. It's more of a bullish bar. This one instead gapped down and opened low right here, and then it looks like retail's coming in to buy the dip, institutional selling into them to end the day. So I am a little bullish for the first couple of days here in the S&P 500, but after that I think it'll probably roll over, not quite as high as this one. All right. Okay, now that I've drawn that up enough, let's go on to the DXY. Now, this one's interesting. It is down 0.3% for the week, so it came up, hit the 200-day moving average like we've been watching forever, got rejected, fell back down. I think that if we run a retracement on this just from the last low right here, so we'll just take the last low right there, run a retracement up. It's hit the last 2 days. So on Thursday and Friday, it hit at the 78.6% retracement. So it looks like it's going to head up again. We'll see if this time, if it can break through this downward sloping 200-day moving average or not. But I think for the first few days of next week, this is probably moving up, which will put pressure on our commodities. All right, M2 money supply just keeps going up. Print, baby, print. Keep the train running. And the 10-year Treasury yield is up 1.3% compared to last week. I'm leaning towards rates continuing to go up next week, which means fewer people will be buying bonds. I see the same thing here for the 30-year Treasury, although what we have right here is we've got this dark blue line right here is the 200-day moving average, and so that's going to act as some resistance initially. We're at 4.75% to close the week on the 30-year, and the 200 moving average is at 4.77. So just barely above it. That'll act as resistance, but I think it'll break through it. All right, and the VIX, the volatility index, or the fear index, as some call it, is up 3.9% compared to last week, but that's had a topping tail week before last, so that wasn't a hard call that it would go down. Similar action here, although setting right above the 200-day moving average, so that could act as support, but I think it's more likely to go down again next week. All right, well, this is up since last week, but I think initially the first few days this will go down. All right, and gold is up 2.1% since this time last week. Looking a little bearish right here, and some increasing volume and decreasing price. So these are the volume bars right here. We got increasing volume, decreasing price on the last few days, which means more sellers are coming in. If you are new to this and new to the sector, welcome, glad to have you. And you want to get into gold and silver, maybe you're just finding out about it now, you're understanding what's going on with the currency and that the government can print as many as they possibly want, but they cannot do that with the metals. Join our free newsletter, and I lay out exactly, week before last, I laid out exactly which levels I would be getting into here for gold and for silver, so you can look in the archives there. Basically, in a nutshell, this is it for gold. We just run a retracement from the last bottom up to this top, and I think we're going to have a little correction here in gold. I was questioning that thesis this last week because we're actually up higher now than we were last week, but it does look like the correction is going to continue. And so I like these lines right here. You can pause this and zoom into these numbers right here, and those would be your buy points, or just go into the free newsletter and I outline it in several pages there. You can read through this thesis. So it looks to me like gold is going to go lower next week. And these are the lines that we're going to be watching, especially this rising 50-day moving average could act as support. But I do kind of expect gold to correct back down and get into at least the 37.50 level, which would be the 61.8% retracement, this third number right over here. Okay, around 37.50. All right, same for spot price, basically coming down. There is a tiny bit of contango, but nothing worth mentioning. And gold divided by the S&P 500, gold outperformed the S&P 500 by 2%. Looks like the S&P is probably going to win next week. So I ran just a quick little retracement here to kind of give you an idea of where it looks like we could go. Also, because Lloyd was asking, he says, hey, Steve, do you see a possible cup and handle forming on the weekly gold divided by the S&P 500? Thank you for what you do. You're welcome, Lloyd. Thanks for being here. So we could pull it up on the weekly, or we could pull it up here on the daily. Either one will work. So basically, some of the fundamentals, or some of the base case here for cup and handle patterns is it's got to be in a rising uptrend, which check, right? It's a bullish continuation pattern, so it's got to be going up. Okay, then we form out the cup, and then we form the handle, and oftentimes when it breaks above the right side of this cup pattern, it does so parabolically, which makes them a lot of fun to bet because you can make some serious money when you do that. All right, so I'm going to go here to the daily just so we can see a bigger shape of it, and we need it to be at least 7 weeks in total time, right? So we start over here in April of 2025, and then we go over here, and that's the cup pattern. We're already in October, so 7 weeks, check. You know, that box is done. Now, another thing that we want is when we do the retracement here from the bottom up to the top, we don't want the handle, ideally, we only want it to correct as little as possible. And it would be much better if it were to correct something like this. This is basically the last sellers getting out before the upward move, right? So we ideally don't want it to correct more than 38.2% retracement, but it could go down here to the 50%, the second blue line, and kind of correct down to there. But we really don't want it to go much lower than that, right? We don't want it to go like way down here and hit the 61.8 and then it's starting to go up. So I would say that this is still a cup and handle pattern, but our level of certainty goes down quite a bit on it, right? It looks pretty good as far as the shape, and I can see the handle there. I definitely see what you're seeing, Lloyd. But I would put the certainty on this as a lot less. If you have a perfect cup and handle pattern, like the gold cup and handle pattern that we brought up ad nauseum on this show, 13 years long. I mean, that one was probably 90% when it broke out above the right side of the cup. This one I would put, because it retraced so much, I would probably put it at 60, 65%. It's not nearly as reliable as if it had only traced down to like the 38.2 and then started to move up. Okay, thanks for the question, Lloyd. I love it. All right, PHYS. Okay, so if you're new to the show and you want some gold, this is where you start, in my opinion. You're basically buying into shares of a warehouse full of gold bars, and you can do it at the click of a mouse. These red, yellow, and green lines, I like to buy more as it gets cheaper, assuming the fundamental bet is still on and our governments continue to print currency. Get some coffee there. Then the bet is still on, right? Okay, as long as the Doge committee is doing absolutely nothing, then this will do very, very well. And I like the red line. Basically, I'm trying to emphasize that you buy more on the way down. So 15% at the red line at $30, 35% of your bet at $28, and then the remaining half of your bet, 50%, at $25.50. Now, if you want to do 20, 30, and then 50, or if you want to do 10, 40, 50, whatever. The point is as it gets cheaper, you buy more. And then when it does reverse, which it should, because the fundamental argument makes a lot of sense, then you get in the black really, really quick. Okay. All right, and that one was up 2.4% for the week. GDX is up 5% for the week, so this one's pretty exciting. This is the gold miners ETF. So hitting right there on the 50-day moving average, the rising 50-day moving average. So now if you don't have any position in gold miners and you want some, I think now is okay for maybe a 10% bet. Let's say you were going to bet $1,000 on this. I think it's okay to put 100 in now, and then maybe make this your 20% line, this red line, and then make the yellow your 30% line, and then make the green line your 40% line, right? If you have none and you've been waiting for a position in these, I think it's okay now to do it because it looks like it's moving up next week. At least initially the first few days. Same thing here with GDXJ. This one's up 4.7% for the week. So I think that, if you have none, now is okay. But I like these lines a lot better. And I think it's pretty likely that we're going to get down to the 200 moving average on some of these gold stocks over the next month or so. All right. Craig says, Steve, I love this channel because of your consistency, good cheer, and very important, your humility. Hubris is zero help in finding value when investing. Thank you, sir. Well, thank you, Craig. I appreciate that. You've been with us for a while, and I'm grateful for that. So, and you're right. Egos do nothing to make you money, but probabilities, on the other hand, those will make you money. So that's what I'm all about, playing the odds. You know what I mean? So like finding patterns and setups where I need to be at least above 60%. If I'm 55, like I think it's kind of a waste of mental energy and time. Like you need to win at least 6 out of times when you see these patterns. And over the long run, you make money. And sometimes you find setups like we did in gold a couple of years ago with the cup and handle pattern where you're winning 9 out of 10 times. So that's where you just got to, in my opinion, bet the farm. All right, silver is up 5.3% for the week. So story of the week, silver made a new intraday all-time high on the futures market of 54.41. So it retraced back down a little bit. So I threw out a flash update on Wednesday of what was going on here and a setup I saw in Palladium as well. And it was kind of exciting. Looked like it was going to be off to the races here. And then Thursday and then on Friday, we just got the confirmation that no, it's not. So it retraced back down. I got, if I zoom out here, let me go to the weekly. I got this parallel channel here. I brought this one up before. I got this from Gareth Soloway. And basically, so this is the great financial crisis crash. And then the zoom up. The 2011 bull run in silver, and then right back down here, this is the COVID crash, and then now up to all-time highs. So it's a pretty decent parallel channel, and good on him for finding that. I don't think I would have found that. And also, too, if we zoom out right here, just pay attention to the top blue line now, and we can see that we're basically at a triple top that got pierced and then comes right back down. So I think it's more likely than not that we're going to correct a little bit here. I drew this retracement here. Someone asked about a possible cup forming right here in the in silver. I don't think we have enough time. So remember, we need 7 weeks. Now, again, it could be shorter, but then your reliability on this pattern goes way down. So it only started forming 4 weeks ago, and now we're already into the handle. So I don't think that's going to be a valid cup and handle there. If you watch Jordan Royburn, he's done some work on silver's previous all-time highs when they hit a new all-time high, like we just did here, and then 4 weeks later we got another new one. And he said they typically double in 7 to 11 months. So after the correction is completed. So, does this correction just go down here to the 50-day moving average and then we're off, or does it go all the way down to the 200 moving average and then we're off to the races? I don't know. But after seeing the action there on Thursday, Friday, I think it's overwhelmingly likely that silver is going to start down over the first few days next week. So I think now is the time to be accumulating quality gold and silver miners. Spot price basically looks the same. There's no real arbitrage here. We've got the arbitrage chart that we had amazing arbitrage over here from the London to the COMEX, the LME to the COMEX, and that has since closed, so nothing to see there. Nothing to see here, folks. Gold divided by silver. So the gold to silver ratio, gold underperformed silver by 3% last week. So it now takes 80 ounces of silver to get yourself 1 ounce of gold, or 80.8. And PSLV is up 4.1% for the week. So if you want some physical silver, this is the place to start. I like buy orders on this one. It's 16. I think I moved that up 50 cents. 16, 14.25, and then $12.75. And SIL is up 5.4% for the week. So I think this kind of like GDX and kind of like GDXJ. I think if you have none, now is okay for like a 10% position, and then treat this red line as 20 and then 30 and then 40, right? So I think now is okay. We're around the 50-day moving average. Same for SILJ. If you have none, I think now is okay for 10% or so. But, if you're already invested, then I think you basically just kick back and drink a beer and make money. Okay. Got some questions this week from several people. What do I get when I sign up for the free and the premium newsletter? Well, I will show you here. This is exactly what you get. You go to the website and you type in your email, and then you get this once a week for free, In It to Win It weekly market recap. Basically, we recap the interviews that we did. This is last week's. We recap the interviews that we did for the week, recap Monday market moves. Maybe you don't have 30 or 40 minutes to watch Monday market moves. Well, you can read it all here in about a minute, and then get my top picks. Click on this right here to watch the Monday Market Moves episode if you missed it. Interviews for the week. So I go over, we summarize the interviews. Maybe you don't have 20 or 30 minutes to watch these interviews, or some of them are an hour. Well, you can summarize it right here and read it in 45 seconds. And then down below each one of these, it'll take you straight to the video, and you can watch it there. Jordan Royburn, Matt Warder. You get my take down below there. Basically me trying to summarize it in one sentence. And then you get what's coming up next week. So in the pipeline, right? So we put in the pipeline here what's coming up next week. And then down below here, we'll put to submit your questions for who the guests are. So if you click on these, then you can submit your questions there. So for this next week, we're going to have Vince Lancy, and he'll be here in the newsletter, and you click on that and submit your questions. Got our technical analysis video series. And then down here, you get your final word from me. So basically what the best idea I got for the week, and what I see coming, right? So for last week, it was Palladium, and so I did a write-up about a pattern that I saw in Palladium that I know at least one subscriber took advantage of on a 2x leveraged one, which is pretty cool. Paid off nicely for him, and I'll usually throw in some charts. And then for the premium members, if you scroll all the way down to the bottom after the disclaimer, so everything you saw right there was free. If you scroll down here to the bottom, click right here, and this, you basically get a whole nother Monday Market Moves video, but this one is with company-specific stocks. So you get the company-specific stocks in there, and then right here is the portfolio. You click on that and download it, and you get the weekend update of the portfolio in a PDF version. So thank you guys to all my premium subscribers. I love that I get to do this, and basically find cheap stocks for us to buy and expensive ones that we own to sell, so that we all make money. So if you're interested, go to stevebartonmoney.com and sign up for the newsletter there, or you can go to just the link down below this video and sign up there. So thank you, I appreciate it. All right, copper, paging Dr. Copper is up 2.1% for the week. So looks to me like it's probably going to go lower. I think any buys around copper here, around this upward channel green line right here, I think are good. And COPX is up 0.5% for the week. So looks to me like it's, that is a pretty bullish bar there on Friday, like right above the 50-day moving average. I wrote down that it looks like it's going to go lower, but I think I'm going to revise that, and it's probably going to go higher next week before it rolls over and goes lower. We can see that there's a general downtrend right here on COPX, so it wouldn't surprise me if it goes up and hits that and then rolls back over. So I like for limit orders right here, 58.50, I think is pretty good for a starter. All right, COPJ is up 3% for the week, gapped up there and then filled the gap. Also looks like it's probably going to go up on Wednesday, but still the same general kind of downtrend. Although this might be like a bull. Yeah, I'm kind of debating here on like a bull flag pattern. It's a pretty dirty one if it is. I would guess a little bounce next week and then lower. So I like 33.25 as a starter position on that. And uranium is up 0.7% for the week. So I thought we'd get a little bit more of a bounce last week. I thought we'd get something closer to this. We just had a little baby bounce there and then finished a little higher. But it still is. I mean, we drew this green line a while ago, months ago, and it's still just following that. So I would expect uranium to be higher next week. Sprott Physical Uranium Trust down 3.2% for the week. So purchased more last week, only 100,000 pounds, but it's still something. So up to 74 million pounds of uranium off the market, unavailable to Constellation. Had a, let's see, baby bull flag did not play out. Yeah, okay, that did not play out. That fell back down. I moved this line up a little bit right here, the red line. I kind of moved them all up. So I think I was in the cheap seats back here with the green line down at 13, which I don't think is going to happen. If the stock market rolls over, it might. But anyways, I like a buy around 17.25, which is just a little bit below where it is now. And then yellow line 16.25 on this gradually rising 200-day moving average. And then stink bid down at 15 bucks. And URNM is down 2.9% for the week. So fell through our red buy line there at 56. So if you're new, you now have a starter position. And if you're new, like this is your first episode, then buying now is fine. You got it cheaper than the guys last week. And after that, I like 50 bucks. And then down here, stink bid at 44. Same kind of thing for URNJ, down 2.7% for the week. If you got your starter position last week, and if you didn't, now is even cheaper than that. So 27, 24, and then $19.50. And oil is up 0.6% for the week for WTI. Brent is down 0.2% for the week. So both of these are basically showing kind of the same pattern, just a really long like bull flag. I mean, this thing is getting pretty stretched here. What are our retracements here? I'm doing this on Brent right now. Whoops, why didn't that work? There we go. Bring it from there to there. Yeah, I mean, we're kind of getting into the zone to where this may not be a bull flag anymore, but I am very bullish on oil. XLE had the same bull flag, and it broke out to the upside. It's just the commodity itself isn't. So I think the commodity is about to reverse because a lot of the equities have already done so. If you guys got in last week, week before last on your bet on the 87.25 was your limit order, you are currently up 5.5%. Congratulations. Well done. Natural gas up 5.8% for the week. I keep expecting this thing to like top out and roll over and top out and roll, and it just has not done so. So it just kind of keeps climbing that wall. Really high RSI, really high MACD. Kind of needs to come back to earth. Let me zoom out here a little bit. There's a fair amount of price action there. Okay, let's say next week is going to be the week that it finally rolls over. Prove me wrong 3 times in a row. We'll see. 4th time's the charm. All right, FCG, so natural gas ETF, up 4.1% for the week. So went through the 200-day moving average. Is this running out of steam or is it forming a bull flag? Kind of a bullish flag. I mean, it's not perfect. It's a very beginner one. Okay, so we'll see what it does next week. I don't see any buys here, so I guess that it's kind of a moot point whether it's going to go up or down. I like 22.75 as a first starter position. If you're really impatient, see if you can catch it on this 200-day moving average around 23.25. All right, and next week we're going to be interviewing Vince Lancy. Vince is a veteran commodities trader with over 30 years experience in gold, silver, and macro strategy. He's known for breaking down market structure flows, futures, and insider-driven moves. So I'll be interviewing him soon. So send in your best questions on gold, silver, and anything else you want Vince to answer. And you can do that through the free newsletter like we just went over. There'll be one in there in the pipeline that is for Vince. Click on that and submit your questions. And thank you for playing. It makes my job a lot easier to simply ask the guests what you guys want to hear instead of guessing. All right, coal, thermal coal is down 1.1% for the week. So basically on the lower part of the channel. Derek is our resident underground miner. He says, Steve, your coal chart is somewhat flawed. Illinois Basin coal sells for around $49. So if you're invested in Alliance Coal, for instance, you're not getting the Newcastle coal chart price. What we're looking at here, I guess, is Australia. So U.S. companies aren't getting the $112 a ton. Okay, yeah, maybe, I'm going to have Matt Werder on again here soon, and maybe we'll refine. Maybe I haven't been looking up the ideal thermal and met coal prices. I'm kind of using these as a baseline. There's nothing, I'm not betting on any of these futures here. I'm just using this as a baseline of like where cost is. But you're right. If the American companies are paying 49, maybe we should be looking at that chart instead of this one. So I don't know if you know the ticker for it, put it down below, Derek, or anyone else, and maybe I can pull that one up instead or as well. All right, met coal is, down 0.6% for the week. Oh, and thanks for the feedback, Derek, I appreciate it. Met coal is down 0.6% for the week, so basically it's still at the lower end here. Waiting for this to revalue here. And our favorite coal ETF, because it's the only one that exists, hit a nice little kind of a triple bottom here, I would call that. So you've got it hit right there on the 50-day, hit right there, went through the 50-day, but hit at the same point. So I like $22 for a limit order entry. And platinum. All right, now this one's still looking pretty good. It's holding this 50-day moving average, this rising 50-day. I'm of the mind, I think it might be breaking down a little bit. See, the price action is going down and volume's going up, so that would indicate that there's probably going to be more sellers. It's up 1% for the week, but it doesn't look to me like this 50-day moving average here is going to get filled. If you have no platinum and you want some, I think now is okay, but after that, I'd be eyeing this. I forgot to do the red, yellow, and green lines here, but I'd be eyeing right around there. Maybe around 1400, and then also eyeing this rising 200-day moving average. Okay, and the other one, Palladium. Now this is the write-up that I did in last week's free newsletter, up 1.7% for the week. So this one's looking really good. We want this support right here that I drew with the white line. We want that to hold. That's basically at, I wrote it right here, 1375. We want that to hold. Was looking like it might be like kind of a cup and handle pattern here. We'll see if this level holds or not, but I think betting here on this rising 50-day moving average, I think that could pay off pretty well. All right, and John says, where are we? John says, I went premium 2 weeks ago and added your technical analysis course. Thank you, John. I appreciate that. I became aware of the current Palladium setup a few weeks ago and happy to see yourself getting juiced. Please consider posting an update this week for Palladium. If I get my timing right, I can justify a big boy description for TradingView. Awesome. Glad to hear it, John. Yes, there was a write-up last week, so I guess that's already been fulfilled. But thank you. I appreciate the support, sir. Okay, the Bloomberg Commodity Index is up 1.7% for the week. So finally, we were right on this breakout. So I took away that white line that was resistance and now made it a red entry point here. So, and the reason is going back here over 2 years, it took to finally break through that 107.50 line. So this is a significant breakout right here. It took over 2 years for this to get through. And now we've come up. Looks like we're going to do a little reversal. And if you've been waiting to get into this commodities index and you didn't do it over the last couple of weeks, then you can do it right here, basically at the 107.50 line. So because it took so long to break through there, and now that it's above that price point, this line right here, the 107.50, will now act as support, and that you can use this as an entry point right there. Okay. And nickel futures is down 1.3% for the week. So it's starting to fall a little bit. It's been hanging around 15,000 for a while. Maybe this is forecasting some economic weakness and recession. And yeah, kind of excited for nickel here. Hoping to see the bottom fall out of it. We haven't been down at below 15K like this. We're at 14,697 to close the week. And the last time we were down at these levels was June of this year. So looking pretty good on that. And NIKL, the nickel miners ETF, is up 6.2% for the week. So your first limit order has hit now at the $14.25 level. Next one down at $12.75 and then $11.50. And REMX, so the rare earths miners, got in over here basically at the same price point, although technically this looks better than when I bought it because you're right there, right above the 50-day moving average on a rising 50-day moving average. So I like a limit order at $67.50, and then after that, $58, and stink bid on the rising 200-day moving average at $50. I would guess this will probably move up next week. And our favorite metals and mining ETF, PIC ETF, is up 1.8% for the week. I raised the buy line on this one as well, about 50 cents, 44.50 as a starter position entry point. Just kind of some sideways consolidation here. $47 seems to be kind of a ceiling right now, and $44.50 seems like a floor. So this is what I call the Charlie Brown shirt pattern, where it just kind of does this, and we can basically kind of bullish consolidation. We can basically pick up buy points down here when it hits that, and then when it eventually does break out of this pattern, it looks to me like it's going to do it to the upside. So it's probably going to come back down here and touch that again, and that'll give you another entry point. All right, and Bitcoin is down 8.3% for the week. So it broke through the 200-day moving average, and that's this blue line right there. Broke through it, falling down. If we go back here, we can see a parallel channel. Let me get into the weekly here. See kind of a rising parallel channel right here towards the upper end of it. Looks to me like the next level of support is going to be, there's a decent amount of price action around 85,000. It's not a super lot of price action, but there is some around 85,000 or so. So I would look for a possible hiccup there. Oh, if it's not obvious, I think the Bitcoin is going down. So I think around 85,000, there might be a little hiccup of support. And then after that, there's quite a bit of price action and support around 75,000. So I think that's going to be kind of like the line in the sand of where Bitcoin either holds, these high dollar amounts or it doesn't. But I look for it to go lower next week, catching first at 85 and then again at 75, although I don't think it'll get to 75 next week. I would be really surprised at that. I pulled up this one other chart. I saw someone else brought this up. I can't remember who it was, but this is gold. This is Bitcoin divided by gold. So as the chart goes down, gold is outperforming Bitcoin, and as the chart goes up, Bitcoin's outperforming gold. And if we go back here to the beginning of the year, gold has outperformed Bitcoin by almost 40%. All right, well, thank you guys for being here. I love doing this. If you want to play a little more alpha, check out our premium service. You get a whole nother video just like this with company-specific stocks of what I'm personally buying and selling with real-time trade alerts. Remember, when you sign up, you are grandfathered in at that price. And thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.